Everyone doing a sound check. Awesome. Yeah, we'll get started here in just a few minutes. Long day today. So let me know if this sounds still fuzzy. Yeah, we'll definitely be going through oil. We went through oil real deep in the live trading room earlier today. Okay, good. Thanks, Brad. Appreciate it. It is a subscription. I'll talk about it in just a few minutes when we get started. About a minute, folks. We'll get it going. Just letting the room fill up a little bit more. Welcome everyone to the Kindle Report. It is around 8:20, so we're going to get started here. I just want to welcome you. I'm Bob Kendall. As I always tell you in the past, and I'll tell you tonight, I share my 42 years of experience to help you manage your portfolios and protect your wealth. Now we've expanded the service from software and the YouTube videos and doing live trading rooms. We had a successful session today. We got to go into a lot of depth. If you're interested, you can go to the link that will be posted on the repost of this live stream to check that out. So anyway, let's dig into what happened yesterday first. Yes, a red day across the board. We saw S&P down minus 0.3, NASDAQ 0.6, and Russell took the biggest hit with it being down 1.2%. So it was pretty ugly there on the small caps. It just continued to be under some pressure as the markets remain, in my opinion, very confused about what's going on. 7 of the 11 sectors yesterday were negative. We really, it was kind of a lackluster day with the exception of the Russell. It was under the most pressure and you just couldn't get out of the way. It just kept drifting lower. Tried a couple rallies, but nothing there. But I think as we go forward, this is all going to switch back again. I'll go through the spreads and all the technicals here in a few minutes. A couple of things that we covered in the live stream today in the live trading room, as I talked about Apple, and I'll tie this together later. Right now I have targets for Apple 173. There's no way the market's going down if Apple's going to 173. And that is obviously a bellwether. I think somebody said it one night in chat or something that Apple is the world's bank account, and it's somewhat a lot of truth to that. But as we just kind of look back a little bit on what came out yesterday, we did see housing starts come out missed. Actually, it was a negative number. We saw the permits, though, actually surprised everybody. They were up 4%. And I think that is pretty amazing because what we're really looking at here is a seasonal switch. We're in November and typically things slow down, but there's a lot of permits still coming out. And it's interesting just looking at housing sales and all that stuff. The stuff is still getting gobbled up almost as fast as they can produce any type of new product. And I don't want to go into a big deal on the real estate market, but we underproduce probably by 1 million units a year. You could probably go back for the last decade. So we're probably behind at least 5, maybe 7 million units in what demand is, and there's virtually nothing out there. And builders are completely booked up. Area where I'm at, there's a lot of people coming in from Cali, so we're getting inundated with that. The builders are just stacked up, and supplies are reasonable and all that stuff. So none of this came into play from the standpoint of looking at permits and what demand is going to be. We just saw the housing sales the other day, and they were good. So we're continuing to see that type of activity. There was also on the housing, just another comment, there was some revisions downward on looking backwards on that. So it was a mixed picture. The permits were pretty good from that standpoint. Something I'm not going to touch in deeply tonight, but we talked about this. I said I would share some of the things that we do on these live trading rooms. And one of the things we went through today was clean tech, looking for stock ideas and things of that sort. And like I said, some of this stuff is going to get shared into the nightly videos. We're putting together basically a constituent list, maybe like I want to call it the Wave Tech 100, something like that. James and I are working on this project, so we've got a lot of stuff going on in the background just to kind of put out some things that we can actually have a portfolio, get some performance, and well, I'll tell you about that when it's appropriate. The thing I want to talk to you tonight, and I remember going back several months ago, and I remember, I was having flashbacks to last night when my sound was off. remember several months ago when we were probably August, maybe July, August, I said, we're not going to know until we get to October or November on what this inflation picture is going to be. And the rhetoric that you're hearing out in the marketplace now on the street is that we hit peak numbers, okay? And then you're going to hear things about, the average number of this is here. And so they're going to try to moderate this story. And the title of this video tonight is Inflation Embedded. And I believe it is in more places than a lot of people want to believe. And we're going to see some things as we go through winter that maybe will tighten up and even cause an acceleration. So we're going to be in for some interesting times. Now, in last night's video, I talked to you about the targets on the S&P at 5,100 plus, between 50, we'll just call it 50-50 and 5160 range on the upside. And I've also been telling you for a while, for over a year, that the S&P equity markets in general, more so on the large caps and the NASDAQ, are going to be more of the inflation hedge as we go forward. And I remember also talking about, that the S&P was going to hit 5,000, maybe 7,500. I've even made crazy rants about it going to 10,000. And it's interesting because a couple of things that are happening, if those events were to happen, let's just say 7,500. That's a crazy number for the S&P, right? But let's just go with that. If we were to get to those levels, everything that you hear right now, the infrastructure deal, everything from these social programs, the reconciliation bill, all of these things are really aiming at putting out more money in the economy, right? So this is supposed to be good. What's interesting about it is it's supposed to be equity, diversity, all of these type of elements are going to help the social environment. But in the end, what's really being created is this inflation, and they're creating the largest gap between the haves and have not ever there has been. And I'll go through some things that we need to talk about tonight. In oil, we saw a pretty good hit in oil yesterday and earlier today. And I think it's interesting because they're talking about releasing some of the strategic supplies. I think it's interesting. So you cut our ability to produce oil, then you dump all of our emergency supplies, and then you call up Saudi Arabia. I saw Saudi, and I'll go through this when we cover the crude here in just a few minutes. But then you call up Saudi Arabia, and they tell you, no, we're okay. I showed you the numbers. We're not moving on anything. So it's very interesting, I think, what's going on. I've talked about this before. This is a planned event to get energy prices higher. It felt good for a day. Maybe we'll get some more of that. I'll go through the technicals here in a minute. So just one last thing here. Let's talk about tomorrow, and then we'll move on to the charts and get into the technicals. The claims are coming out tomorrow. We're getting close, actually. I forget the exact number, probably 225 is going to get close to pre-COVID levels. So we're expecting 260 new claims tomorrow. Continued claims 2.16. We're just going to say if it gets under 2 million, that's going to be a good sign that we're getting more traction. I'm still kind of hanging on to that idea that things are going to start to slow down as we come forward, and we'll just have to see what kind of reports we get. Here we are, just about mid-November, and we're still not in that window. In the next couple of weeks, we should start to see maybe a shift there. We'll see what happens. So let's go ahead and get into the charts and see what we've got going there. Okay, so we go to the daily E-minis here. we're up 250. We were up about 4 handles just a little bit ago. As far as what happened yesterday, we were red across the board, but nothing broke down. We are seeing some drifting of the PPMs. They're starting to lose a little bit of the luster that we had just a few days ago, but we're into that mode. And I know I've talked a lot about this, where we get these PPMs are going into trend maintenance mode. And what we've managed to do, regardless, in the last 6 sessions, we've only had one day where we closed under the 10-period moving average. We continue to climb right along that line. 46.77, the low yesterday, 46.84. Let me just make sure that's today. Low yesterday, 46.79, and the 10 was 46.76. So we're just staying right above that. Today, that number is 46.77. Low so far, 46.84. We look at the market grid. Let me bring that on screen so you can see that. And the market grid is suggesting we've already traded toward the S1. So S1, I'm looking for a print back above 47 handle tomorrow. Looking for an S1, maybe R2, 47.01 on the futures. There's a bit of a premium in the cash. I'll talk about that in a minute. But that happens, we should see some stability in these PPMs. I'm just going to draw in for those of you that may be the first time on the channel, just to show you how these indicators work here. And this is a theory that came out of these indicators, is that momentum precedes price. So we get this momentum spike on these indicators, and the peaks come down the road as we go through each stage. And what happens here with these indicators, they go down and then sideways. So we need to maintain certain levels of momentum to go forward. So we should see these indicators set up, and then I talk about this all the time, this angle of attack will continue, these moving averages will continue to go up. So the PPM1 is only up at 0.0326, so that's not a huge number from that standpoint, but what it is the PPM2 is going to be the primary demand line. You're going to hear me using that term as we go forward over the next several weeks. And it's hard to believe that somehow we're only like 6 weeks from year end. But that's going to be your primary line. That 21, just simple average. I know people like to use the 20 and the 50 and the 200. I did these numbers. When we were building WaveTech many years ago, we tested every possibility, and 21 was, we actually started with the 21. It was Fibonacci number, and that was the main thing that attracted us to it. So we just built everything around that, and then tying in the 10 and the 40. Neither of those are Fibonacci numbers. So they're just what worked out to recognize patterns and trends and what our goals were when we were building the models and the WaveTech concepts back in the mid-'80s. So this is what we're seeing here then is that angle of attack, everything's going on. That should continue. Now go over to the SPX, same story. Yesterday, 46.81, 10-pair moving average 46.88. We'll look at the grid for today. Not a lot to go through. We should be able to get through tonight's broadcast fairly quickly. The expected range for tomorrow, S1, 82. That would be down about 6 handles. And R2 is 47.01, but I was talking about the futures getting 47.01, so could see as much as an R3 if we can break through some barriers. There's some interesting things set up on these patterns that are looking like we're at least going to attempt to get a bit of a rally here tomorrow and get back above 4,700 and see if market participants are actually comfortable trading above that number, see what kind of, we get rejected from that level. So those of you on the live trading will be watching that in the last 3 hours of trade tomorrow. But the bottom line is these trends are in place. They're not going anywhere. So let's go to the NASDAQ. NASDAQ up 27 handles. These patterns are always, typically are going to be the same when we go through these indexes. What we will see different is in the Russell. We'll go through that next. But the NASDAQ is just staying above the 10, 16,222. Look at tonight's action. So far, 16,320, 16,340, high low. We look at the grid, S1, 16,271, R2, 16,395. So that is pretty much the range to expect, I think, as we go through tomorrow. So looking at S1, R2 across the board here. Let's go to the Russell Cash. Like I said, this is the only one that, this has a different configuration, and I'll show you the spread, what's going on too. So it's continuing to deteriorate here. A couple things that happened. We did get this cycle. Thought it was going to be a cycle low. What it looks like now is it's probably a cycle high, and we're right at testing the 21-day moving average on the Russell Cash. 2360 is that number. We got down to 69 yesterday. We're seeing a bit in the futures, really nothing. We're up 70 cents on RTY right now. So there's nothing really there, but this cycle, typically when the cycle hits, which was on the 15th, if we take out that low and close below it, typically will suggest another three to 5 sessions of trading in the sideways range. And PPM, if we look at the PPMs, PPM1 is collapsing, PPM2 is through its first, second derivative, PPM3 is rolling over. So there could be more sideways pattern set up, and there's a potential to actually trade all the way back down to the 40-period moving average in this pattern, pushing us down to around 2304, but it is going up about 4 handles per day. So probably more like 2320, something of that level. Let's take a look at the spread. See, it took a pretty good hit yesterday, still in that basing pattern, but this thing, if it takes out the lows, then the small caps are going to be in really big trouble here, and we may see a pattern failure set up, something like that. But so far, we're still within this pattern. I've been talking about these lows down here are where we're going to be watching. So the next couple of days could be pretty critical from the standpoint of the NASDAQ hanging on to, the Russell hanging on to this relative basis. And if it gets below that, we're going to see even more happen from there. So I'll just come back on screen here for a minute. And one of the things that reason why I've changed how we do the meeting every day is because of our database, because of the change in the clocks. I used to get this data an hour earlier. And so now I have to wait till about 6:30 or so. So what I'm going to do is I'm going to review our dashboard database, because there's a couple of things I saw there that I think is going to be interesting to look at. And one of the things I'm trying to find right now is a place, if we're going to get this move higher that I'm talking about, and we're going to start a new cycle, we're going to have to figure out where the money's going to flow, what sectors, what groups, what, those type of things. So that's what we're working on right now, trying to come up with an answer for that. Don't have an answer. If I had it, I would share it with you. Just don't see a clear run toward those where things are going to go. Even looking at our modeling right now, we've still got a lot of things long on the intermediates, and we just don't have that clear picture out there. So let me go out here and let's go to this dashboard. I'll show you a couple things here that I think is interesting. On our Portfolio Expert, there's a dashboard here of data, and it's interactive, so you can see. Let me go full screen so you can see this a little better. Yeah, so you can see a lot of things. You can also, what's nice about this, if you want to see what the modeling was doing, you can change it by that, but you can also change it by date. So you can go back in time. You have a time machine here where you can go back and set this to any of these dates. It looks like it goes back to 1/7/19 right now. But as we look at what's going on with equity, so everything's broken out. When I talk to you in a minute when we go to the database, I want to just spend some more time but making sure that the other database is updated. But as we look at this, we can see exactly how many buys and sells, and this is a little bit different version of this. We're looking at just equities right now. They're 55.95% long. You see ETFs are about the same. Mutual funds are a little bit different. But we look at some of these interactive stuff, it really is showing us what the optimized or the best of breed models that we have working on each symbol. Now there's two, this is all weekly intermediate, so it's just showing us that information. One of the things that I talk a lot about, you'll see in this chart here where I have right now, we hit a peak of 72% bullish, and that came back in, it looks like around March of this year. But as we go forward, you'll notice that the percent bullish actually dipped down to 50%. So it actually tailed off as the market was going higher. And this is important to understand. This is when the market is in a trend mode, it's recycling. The number of stocks participating will get less, meaning that there's a recycle, more narrow participation. And that's why we've seen some of the things go on like we have. I won't go through a big discussion about this, but if we were to go back to 2007 and coming into 2008, there literally, when we made an all-time high on the S&P, there were only 37 stocks that were driving that index at that time. And they were the top end of the index. Virtually nothing else was working at that time. The index has made a new high, but nothing else was working. But what we can see here is we can go into a lot of different sectors. We can see the rotations coming into sectors, and it's actually pretty healthy here. There's just looking at all the industry groups from energy to financials. There's just a lot of rotation, mostly positive. It's a pretty healthy environment. Not a lot of selling going on in any of these items here. So let's go over and look at the WaveTech database. And actually, there's a very quick test. Yeah, everything's updated to the 17th. That's a good sign. Let's go ahead and go to research. Go to daily. So daily's down to 61.34. I'll show you exactly what happened. I'll zoom in. So we had about 1,400 sells, only about 135 or so. I'm just rounding these numbers, 35 buys here. So we had negative ratios on both. We're still at this 61%. And remember, we track 16,376 symbols. So this is a very large database. There's over 10 million calculations go on every night when we run our models on this many stocks. And so this is still a positive number. We're back below the 62. 58% is going to be the big number. We are seeing kind of a cleaning out of the database. And I could click on this 1.2 long, and we could actually dig into the stocks and see what's being sold. I won't do that. But the bottom line is there was some negative rotation, and that's probably more healthy than anything else because it sets up some of the other elements as far as the duration fulfilled. There's kind of a refreshing going on. And a lot of times we get up, and I talked about this in the past, that a lot of times this database will get up around 62, 68%, and it just rotates. We get a bunch of buys, get a bunch of sells, and then it's mixed. And this is how the database works. You have to realize that the short-term database operates on about roughly on an average 40-day cycle. So a lot of these symbols are coming in. They'll stay on between 35 and 45 days. Sometimes they'll extend. But for the bulk, the mean is right there around 40. It's on average days long is 40, and then you get standard deviation about 10. So that puts us up at about 50 days. So the nice thing about looking at a database like this, we can see the rotation. I've talked about this in the past, that really what we've seen in the past is that the database, we go back a year ago as we went up into where we are right now in the market, we saw roughly 5 cycles of the daily database and only 1 cycle of the intermediate database, and that just happened in the last, let's say, 6-8 weeks, where we saw everything cycle back down 42%. Now we're back into the 50% handle. And so these things rotate because it's such a big database. Only when we get these big crush jobs, like in 2020, in January and February 2020, we were just dumping everything. Even before the market started going, the database was only 40% long. I think the second day of February, the second week of February, we were already bailed out of almost 60% of the stocks in the database. And then, so that was a good thing. But we're not seeing that kind of negative rotation right now. So went in a little deeper into the database tonight because I think some of the things that are going on here are really important to understand, and that where we are in the markets, because what's happening, my opinion, is that we're starting to recycle, trying to set up a next move to the upside. And this is part of the process we're doing. One of my favorite old lines I used to go, "You may love Jimmy Dean sausage, you don't want to see it made." And when you're watching 16,000 symbols, we're making Jimmy Dean sausage, and we go from the slaughterhouse to the packaging. And right now we're just seeing that churning, and that's really the best way to look at this. All right, so let's get into the for the rest of the show. Then we're going to go through. We're going to have to, I said we're going to get through this fairly fast. So much for that, right? Things I want to talk about. I do want to look at the Dow. Dow printed over 96 today. It's interesting, some of the correlations and things going on with the Dow and gold. So I'll pull those together. We'll go through the 10-year. We'll look at that. Not a lot there, but a brief overview. And I'm going to I used to do crude and then this. So we're going to do the interest rates, the Dow, gold, and then crude oil, and then we'll do Bitcoin. Okay, so here we go. Yeah, so the Dow was able to spike up yesterday, or we'll say Wednesday. It hit 96.24, came off of there pretty good, closed 95.79, bit of a reversal pattern. PPMs are kind of peaking out here, but this angle of attack is really strong, which tells us that there's going to be substantial support probably as we get around this S3 number, 95, 35, 90, 95, 50. And really what you're seeing is this index is 60% Eurodower. So really what you're seeing is the Eurodower getting hit pretty good. And that's causing the Dow to go up. And I talked about this last night. I believe the reason that's happened is just interest rate differential from the standpoint of what's going on in the German 10-year versus the U.S. 10-year. And there's just a lot of currency being moved around. There's some other facilities going on with the Fed. So I was catching up with today, looking at some Dow supply that has changed a little bit, little shortage of dollars, so that's also causing it. And so that's what's going on there. I talked about this. I think we're on our way probably to somewhere between 98 and 100 on the Dow index. So I'll go through that more. So let's tie this together with what's going on with gold, which I think is really interesting because normally, if you were looking at gold, the last thing you'd expect to see was the Dow going up and the gold looks just like it almost the same type of pattern. We did get a buy on the 8th on gold. And so we're setting up this flag pattern. I talk a lot about these dragon heads. What's really important here is that the 10-period moving average is slicing through this formation, which is going to be a rock solid bottom 1851. And so far tonight, we've had a range of 68.73. The bring up the market grid here just quickly. 65 is S1, 75 is R1, so we're trading S1, R1. Look for probably a move up to R2, especially if the dollar just backs up just a little bit more, which it looks like it may after that little bit of a reversal on the dollar. So it's interesting, though, that this is happening, and I think that some of these markets, I don't think it's that unusual to have the dollar and gold going up. Ultimately, somebody has to lose here at the moment in this current cycle. I don't think it's important because of the things that are driving the dollar higher are different than what's driving gold. I still think this scenario that I'm painting to you, that the inflation is embedded in the economy like ways that it's not going away. It's not transitory. I said we'd know by the time we got here. It's not transitory, and I believe this bid that showed up in gold is a lot to do with that. All right, let's get into crude oil. Crude took a pretty good hit. However, and I talked about this on our live trading room today. The ppm1 has already turned up. We're still down tonight. We're down 0.53 percentage wise, but the ppm is starting to turn up. And what that tells us, we're going to head back toward this 40 period 79.15. I talked a lot about this level being major support. 77 was a big number. I didn't think we'd get hit on that. Let's take a look at the weekly, and I'll go full screen so you can see this a bit better. But that's the red line, or 77.79, and we're trading just below that level, is the 10-week moving average. It's up at 0.19. ppm2 is up at 0.35, 0.75 ppm3. So we should see a rebound. I'd be surprised that we close under that 77.79 level on Friday. So I'll be looking for a rebound in the next couple of days here, and especially with ppm1 turning up on daily, we should get that. But once again, excuse me, wrong screen here. Once again, I think the scenario that's going on in the marketplace, being driven by the administration, is to back up, shut down pipelines, shut down production of U.S. oil, and then if they are going to dump the strategic reserve, this is the craziest thing I've ever seen. It doesn't even make sense. Meanwhile, why don't we just crank up our oil production and not ask Saudi to do it? Which there was an interview that was done overnight in, I don't know, it was a conference somewhere. It might have been in Dubai. I'm not sure about that. But they're just basically saying, no, we're not moving anything. So I don't know, it's almost like suicidal, it seems like, with this thing. It's like, yeah, I don't know. So we'll watch what happens. But as I've said before on the crude oil and this rise in crude, to me it looks very this is a planned event. And I still think ultimately we're probably going to see, something around 92 to $100. I don't see anything change in there. We are seeing some of the PPM start to flatten out here, but I think that's going to be just a high level consolidation from that standpoint. There's some numbers out there that for me indicate that is going to stay pretty static from that standpoint. Okay, so we'll go to final market. We'll look at Bitcoin. And there's been a couple things. I tweeted out earlier today about that there was a cycle low coming on Bitcoin, and it hit. This is an hourly graph we're going to start with tonight. And now we just got another cycle low hit. And if I put up some Fibonacci price projections on this chart, we'll see something interesting from what's going on is we've got some objectives here. Min objective 6246. I'm sorry, 61,785. High target 2 is 62,700, 63.65. So it looks like we want to come back in here. PPMs are all turning up. They're actually accelerating on this is on an hourly basis. So it looks like we're starting to form and turn these moving averages up. They're already starting to accelerate a little bit here on the hourly. So let's go over to the daily. I mentioned we did get a sell signal. So what the models are doing is looking for trends. Right now we're in a neutral trend, so that's why it's not in at the moment. But we got a potential for a reversal. We look at the market grid for today, and this is still for Wednesday. The Thursday isn't out till later tonight, and I've been trying to, if I'm around, to tweet out that grid, later tonight. It actually comes out in about 3 hours from right now. But the pattern is setting up here. We're looking at 60. The resistance here on the daily is right at 62,747, 64.84. So it looks like we're probably going to rebound up in there. It's encouraging. We're already seeing PPM1 turn up on the daily. As I said last night, I do not see us getting into any type of pattern that is going to be full out collapse on that from that part of things. It just doesn't look like we're into one of those 20% hits. Everything that's suggested here is still good. I'm going to go to the weekly, and it's Wednesday night, so we've got a number of days to go. But we did print down, I talked about this 10-week moving average, 56,949. The low so far has been 58,451. So been talking about this for a while. This is a pretty key number. And once again, next Sunday night, I've got a pivot number at 60,612. 6012 is that number. And if we get, as long as we can stay above that, we're probably going to be in okay shape. So that's 60,612 is the pivot. And that, I'll talk about that probably in tomorrow night's video as well. But that's the setup, and more likely I'll cover that on Sunday night's video, because that'll be right before the close for the week, because these bars go Sunday to Sunday. Okay. Okay, folks, that will do it for tonight. I appreciate everybody showing up. I'll see those of you that are on here that are part of our live trading room at 1 o'clock New York time tomorrow, and look forward to that. And once again, if you haven't subscribed, subscribe to the channel, hit the bell, all the stuff, because I do live streams every night. I used to do posted videos, but I found them to take too long. I always quote Ernest Hemingway saying that I'd write you a shorter letter if I had more time. So anyway, folks, thanks for watching. I get to drop the mic, go home and have dinner. So have a great evening. Have a good day trading tomorrow. See you folks that are coming at 1 p.m. Eastern time tomorrow on the live trading room. Take care. Thanks a lot, everyone.